Hey everybody, welcome to this episode of The Complete Advisor. So glad that you are here joining us. Great topic today, very big topic, and it's one that I'm going to introduce before I introduce our guest, John. I just want to tell you, so we're going to talk today about Bitcoin, we're going to talk about crypto, we're going to talk about where it can fit into your practice. I know it's something that comes up all the time. If you're not looking into it, clients are asking you about it, and my gosh, you've got to have something to be able to say. And so joining us today is John Ruth, Build Asset Management. John, great to have you here today.
Thanks for having me back.
Now, there's a great teaser. So John was on an episode back, maybe episode 21, 22, back a ways here. And we talked 401ks, we talked about just kind of some generalities, and we touched on Bitcoin. And you, sir, have been working in the crypto space. Very successful practice on a personal level, but then also now with Build Asset Management, you're building different funds.
That's right.
And one of the funds that you're working into the crypto space. Tell us just maybe 10,000 feet what you got cooking down there, and then we'll dive into today's topic.
Well, Build really focuses on fixed income. Mm-hmm. And so we came to Bitcoin in a different lens than I think some people, as I've talked to others who've gone on their own journey, came to the conclusion that this is something that they need to study and be a part of. They come to that conclusion in different ways. And I think for us, it was through the lens as a credit manager, which is kind of interesting because before we started recording, we were talking about volatility and some things like that.
Yep.
And so, what do we focus on as fixed income managers? It's risk mitigation, right, and steadier returns. So that presents maybe some interesting things for us to talk about during our time here together. But one of the other things that we really focus on at Build is to try to differentiate Bitcoin from crypto in general. Mm-hmm. And so along with our risk management ideas, we're also sounding, I would say, the alarm to tell anyone who's looking at the space, whether advisors or clients or institutional parties, that you really have to differentiate what's good, why do we need Bitcoin, and then what is the other stuff. And which one solves a problem and which ones are maybe cute by half.
Yeah.
So kind of a joke in our office when we started this endeavor in blending fixed income and Bitcoin. We had an unofficial cuss jar. So we said, look, you're going to fund the company Christmas party if you call it crypto. So we tried really hard to just make everyone think intentionally about defining Bitcoin and how it's different from other types of digital assets. And that's one of the things we focus on heavily at Build.
So you do have, with crypto, you have, the only one that I can think of is Bitcoin, and then I can think of, the Doge one just because that one came up, the dog. And then there's one that starts with an E, and I'm going to sound
Ethereum.
Yeah. And then after that, I don't really know anymore. How many are there out there in this category?
Countless. And there, you and I could start, Dennis and John coin. Nothing would stop us from doing that. And, that in part goes down this rabbit hole of discovery as to, again, what problem is Bitcoin solving?
Yeah.
How does it make the world a better place? And how is it different than, and to answer that, as we kind of kick off this conversation, Bitcoin has this really interesting, almost immaculate conception. Mm-hmm. So you have a founder, Satoshi Nakamoto, presumably a pseudonym. We don't know if that's an individual. We don't know if it's a man. We don't know if it's a group of collaborators, working under that pseudonym. But with Dennis and John coin, or with Ethereum, you have a CEO, and you have control and centralized control. And part of the why do we need Bitcoin comes from this idea that you could have a permissionless money, a governmentless money. And that's not to be anti-government, but it is to caution who has control over the money supply, and then the rules, the regulations, the policies, that go with that. And that's not a new idea. This is something that Thomas Jefferson and John Adams and even George Washington were having, really fierce debates about at the founding of this country as to what is sound money. One of my favorite Thomas Jefferson quotes, if I don't butcher it, I like reading it more than I do reciting it, but something to the effect of paper is poverty and that paper money is only the ghost of money.
Yeah.
Right. And so it's this. He's speaking about the concern of what happens when you debase hard currency, which in his mind was gold and silver.
Mm-hmm.
And Bitcoin has some elements of that we can talk about in terms of transactions and settlements and this evolution of money. But this has been something that really smart people who have left us a pretty good chassis to build upon have warned about the ability to have too few people in control of the money. Yeah. And that's bad for, in our view, democracy and for human rights. Has been really bad for inflation and just all of us who have experienced any concerns, question marks going through the grocery store. But how that relates then to the advisor community is, how are we thinking about the construction of portfolios? Mm-hmm. And specifically with the lens as a credit manager at Build, you have this 60-40 model that all of us who have ever, picked up an investment book have some dial of 60-40, right? The Markowitz efficient frontier. And the 40 in that example is bonds. It's kind of the base case. Mm-hmm. And if bonds are just the IOUs on the money, if the money is dying being you have this inflationary effect taking place and your purchasing power is being eroded, and what did you and I do today to make, contribute to that decision? And if you say, well, nothing, then you start to have this question of could there be a more efficient means, even a more equitable means of having, a system that stores value and is used for commerce and trade. And Bitcoin is evolving, we think, is a very strong and salient form of a digital gold. As an equivalency, if you think about gold as a commodity money, the way Thomas Jefferson was thinking about that, void of having the ability to, put his finger on the internet at the time. Yeah. But you have this scarcity element that's really important in gold that paper didn't have, and that's really what he was warning about at that time.
So before we dive into these questions, so with Bitcoin, is there legitimacy? Does it come from longevity, having been around now for a while? They are clearly the leader in this space.
Yeah, well, it's it's always that interesting. Who is they?
Exactly.
So yes, there is some game theory in all network effects as to who ultimately absorbs the biggest piece of the pie. Mm-hmm. But you have also this tendency for money to convert to one thing, and that usually is by default of it's easier for us to do global business that way if we agree on one thing. The dollar enjoys that position, today, but it is, actively under threat by countries who would like to see that position change, and it's also under threat by our own doing. Mm-hmm. We're making a pretty good job of screwing it up as we go here as well. So the uniqueness, I think, then of like the who wins is, I think you have to come to the conclusion that I have or we have at Build, which is money tends to convert to one thing over time. You have to ask, do I want to participate in a monetary system that has a CEO who therefore can control the supply of that currency? And so all the other digital assets that you reference have that, whereas Bitcoin uniquely does not. It has hard-coded rules that limit its supply. There will only ever be 21 million Bitcoin. That's it. And so it's arguably more scarce than gold, which we tend to find at about a rate of 2% increase to supply each year. And as price goes up, the encouragement for entrepreneurs to go find more of it increases a little bit, but on average, it's about 2% increase in supply. But there's probably more gold on a meteorite floating around or an asteroid floating around the universe than we have pulled out of the ground here on Earth. So it's not infinitely scarce, whereas Bitcoin, or rather definitively scarce, whereas Bitcoin enjoys that position. And because the rules, this immaculate conception, if you will, that Satoshi created, a system that is reinforced by the participants, you don't have a CEO. You don't have a centralized power. There is no Jay Powell in control of the money policy or the money printer. And that should tampen out some things that you tend to see when you have expandable money, which is what paper money is, even in its digital form today, because you and I both know our money's not all at the bank. It's been rehypothecated. It's in different places. So that scarcity element and the decentralized element, I think, give the people who have willingly and voluntarily opted into a Bitcoin system more confidence in that system. And to your point about age, here we are recording, we're using some really nice, new stuff. Go back to, just tuning into the Chiefs game yesterday. It's hard for me as I'm traveling, to stay tuned in on 96.7 KCMQ, which broadcasts that, coverage for me in Jefferson City. I lose it periodically as we were going about our business, in the countryside in central Missouri. And so how much has that business evolved to where now you have a podcast that can reach anyone,
Anywhere.
right? Anywhere in the world who has an internet connection. We've seen the same evolution in technology, and Bitcoin isn't the first attempt at having an e-money system. I never had a MySpace page, but maybe you did?
Nope.
Okay, so, you can point to these examples to say, well, it seemed like MySpace was going to be a clear winner, and then Facebook ate their lunch.
Yep.
And then Facebook had to buy some other parts and pieces so that Instagram, didn't consume it, and so on and so forth, or Walmart's battle with Amazon. And you can point to all these examples. But this isn't the first attempt. So as early as the internet was evolving to really be, a communication system, as early as the late 80s and early 90s, you had cryptography, this idea that you couldn't hack the digital money, and also, proving that you couldn't duplicate or counterfeit, a double spend problem, which is really what was keeping these earlier versions of an e-money from becoming mainstream. That plus, I don't know, I was probably in 6th or 7th grade before we actually had reasonably fast internet, at my house. So you've seen, I think, an evolution technologically that we can all, I think, look back at. If you kept any of your old phones, you can look back all the way to the brick phone that you first had, or for me, the Nokia 5160, I think, was my first.
Yep.
And you can see that evolution. That's not a foreign concept to you. But I think uniquely in America specifically, since World War II and Bretton Woods system, we have really enjoyed this engineered dominance of dollar dominance. That's not a position that most people in the world have had, a stable, consistent currency.
That's a really good point.
And so I think we take that for granted here, because if we were having this conversation in Eastern Europe, where they've had Soviet money and EU money, and it's come and gone. And I have some friends that grew up in that world. They're more accustomed to a reset of the currency and the rules happening more often.
We've never experienced it.
We haven't lived through it, but we're doing things that tend historically to make countries come to a really hard decision, and that is our rate of spend and our decoupling from anything that is backing the money, which is this August 15th, 1971, we came off the gold standard. So, now we have this limitless ability to print, and I think we've proven under all administrations that we're happy, eager, and willing to do that.
Yeah.
And again, those were the kind of things Thomas Jefferson was warning us about when he only had marginally fast printing ability at that time, but these guys did a pretty good job of foreshadowing what could come and said, you be really careful about that. So we probably could sit here for a day, and I would tell you it took me probably close to 100 hours of really studying this to move from being very skeptical to, interested, and now moving all the way to the realm of advocacy. So, depending on who your listener is that's tuning in here for the first time, what I would say is, what can you take away from this podcast? You've got at least one person who likes being seen as a reasonable individual, me, telling you that things change, and people who fail to understand that things change and remain hyper-curious tend to get wiped out historically. I think that there is a change that is occurring, a change that can be beneficial to humanity, and an opportunity to help if you're a financial advisor listening to this and you consider yourself a fiduciary, whenever you stop being curious in your practice, I would say you're letting your clients down. So Bitcoin is now, and this isn't an infomercial for Bitcoin. I don't sell Bitcoin at Build, but Bitcoin is now the best performing asset class over the last 15 years. And if you're someone who's listening to this and saying, I haven't had any exposure to that for my clients, I don't even know what it is or how to hold it, buy it, sell it, store it, let alone think about implementing that in my practice, you're behind. Sadly, you're right still in the middle of the pack with all the other financial advisors who haven't been, paying attention to this for a number of reasons. Sometimes just because the heavy-handed compliance said, we're not going to.
Yeah.
And I think when we really leaned in to this topic, it still very much had an ick factor on it from the traditional financial industry. But fast forward to even the last time I was here in the studio with you, there's been a tremendous amount of regulatory clarity on this topic, so much so that you had RFK Jr. and Donald Trump announce a strategic reserve policy where Bitcoin would be somehow held and potentially coupled to the dollar. There has been regulation that would put those kind of thoughts into motion, introduced by Senator Lummis of Wyoming. I sat in a small group meeting in Nashville this year where the Bitcoin conference was held and listened to Senator Hagerty and Senator Blackburn, Governor of Tennessee, and many other policymakers and elected officials talk about a future that embraced and provides regulatory clarity for Bitcoin specifically. And then I think there's curiosity about, is there also a technological evolution that can, benefit maybe even settlement practices on other rails of tokenization? You've seen BlackRock lean in the fastest AUM growth to this sector, to this asset exposure than anything else before in history. And now you're hearing, some rumors that even the Harris campaign have maybe started to soften their stance on Bitcoin, that if they were elected, they would be less hostile than the Democratic Party has been as a whole up to this point. And I think that's, like your counterweight there is Elizabeth Warren has been ultra hostile to Bitcoin and all forms of digital assets. But you have others in the party who are saying, this is not really a political issue. This is a money issue. It shouldn't be political. And we should, and from their perspective, they're saying we certainly shouldn't let the Republicans own this topic. We've got to get involved in it. And so there may be self-dealing reasons they don't want to lose those voters, especially in the middle of tight elections. But more and more, this is evolving as a topic of our times, and less a fringe topic. And I think that's all the more reason to give advisors confidence that they need to spend probably 100 hours reading books, listening to podcasts, doing their own study, but be able to articulate what this is. And articulate doesn't mean some BS response to a client. I mean, actually explain to them what it is and how it's different. And maybe some of the things we'll get into here today can help you on that journey.
Perfect segue. All right. So for those, for my prepared questions, so for those financial advisors that are new to the space, what makes Bitcoin unique as a form of collateral versus comparing it to real estate or stocks?
Well, and so if I could give a little bit of background as I answer
Please,
that question. So your question was about Bitcoin as a form of collateral. And so we've been talking about Bitcoin prior to that question as a new asset class, potentially a new monetary rail. So a little bit about what we do at Build. As I said, credit managers coming into this space from the lens of fixed income, which again, usually word cloud association, you usually think pretty conservative stuff when you think fixed income.
Yes, you do.
Even the lesser quality fixed income, generally that word cloud association is there. So again, we don't sell Bitcoin, but to understand Bitcoin and kind of understand where these monetary rails are going, one of the theses that we have is that emerging presently is a U.S. dollar system, which I think would be naive to think that that's going away tomorrow, regardless of what digital asset we think about. And there's a lot of other, I would say, people who are anchoring to that system. You know, you upset a lot of apple carts if you just do away with the U.S. dollar system. That's probably not great for you and I waking up tomorrow, you know, in a world that doesn't have a U.S. dollar system. But just as we had prior to 1971 a gold-based system where those dollars were supported by something, and they're not today. We're on the petrodollar system. If you've followed that change in history, you could see a world when you kind of peek through some of the policy changes that have been announced, where you have a Bitcoin monetary layer, a base layer, supported by a scarce asset, which could be Bitcoin, and people still wanting to facilitate transactions and settle in dollars. And so when you look at the evolution of currency, whether it's shells turned into beads that you and I were exchanging, or it's actual dollars today, or, Jefferson actually wanted Spanish pieces of 8. So you think back to like some of your like National Treasure, that movie. It was a real thing. It was the coin. That was the coin of the realm at the time. It had the best gold content of anything going. He's like, let's just use that because it's verifiable. We can show up at any port. You got Spanish dollars. You can use those. So he wasn't even advocating for his face to be on anything, at that point in time. But you see these two things kind of converging, at least the thesis that we have at Build, and then you have demand presently from business owners who are operating already in that emerging system. And so these businesses have chosen, and we could debate whether this was smart for them to do or not, but they've chosen to own Bitcoin as a balance sheet item in their business, the same as they would have cash or money market funds or U.S. Treasuries. They've said, okay, Bitcoin is now something that we show here on the asset column, of our business. But think if you're brand new to Bitcoin, maybe think about this as gold. If you and I walked downstairs and bought lunch in the cafeteria here at the building, and you had a gold bar in your pocket or you have dollars in your pocket, which one are you parting with for a grilled chicken sandwich, Dennis? It's dollars. It's the dollars. It's not the gold bar, right? But you're pretty confident whoever the clerk is on the other side of that would probably take the gold bar if you showed up and said, this is all I got to deal with today. Can I buy the chicken sandwich from you? They're probably going to take it, right? So you have a system where you have the opportunity to be a long-term holder and speculator in Bitcoin and Bitcoin price appreciation, which are these businesses who've made the decision to own Bitcoin on their balance sheet, but who would rather not depart with that position today, but somehow want to monetize that position. And so how would you do that? And they're doing that today through direct lending, which has become a big part of the institutional investment space, private credit, direct lending, except that they're willing to post their Bitcoin as collateral. And maybe different than you and I were talking about real estate before we got started here today. If I go get a home equity loan on my home is the collateral, right? Exactly. If I fail to pay back, the bank's going to take back my home. Here, if the borrower fails to pay back, we're going to sell their Bitcoin. So now, kind of develop that background now into your question of, why is Bitcoin kind of an interesting collateral form? Well, one of the answers to that is you have this convergence of dollar and Bitcoin occurring today, not because anyone stood up, at a podium with the presidential seal on it and said, we must do this today. Through volunteerism, you have participation in this network, a decentralized, transaction and settlement network, and a desire by those participants to continue to hold Bitcoin, exchange in dollars, and they're saying, hey, we need some lending facility opened up to us to be able to do this. And we are willing to we have so much confidence in our willingness to pay back these loans that we'll post, whatever we have as collateral. In this case, it's Bitcoin. So that in and of itself is kind of interesting when you think about how similar that is, because that's not an entirely different mechanism. It's a very similar mechanism to any other form of direct lending. But the fact that there is a market growing where you have the consumer saying, I want this type of loan structure, build this type of loan structure for me. That in of itself is kind of a tell on where things are going.
Well, let me ask you a question on that. With real estate, with stocks, I know how I feel like personally, just from my side, neophyte here. How does Bitcoin compare on transparency, on liquidity?
So it's the hands down winner on transparency.
Explain.
Well, because of the blockchain. So have you heard of the Bitcoin blockchain?
Dumb it down and say it to me.
Okay, but is that a terminology you've heard?
It is
before?
a term that I've
okay,
heard, yeah.
So the concept of the blockchain is that every transaction is shown and facilitated in an open source network. Open source just means anyone who has a desire to download a program that can peek into these transaction sets can. There's no license to pay. You don't have to pay Microsoft, whatever I pay them every month that my cloud storage isn't enough. There's no entry fee. You just need something to plug power into and the know-how and desire to download a program to be able to see.
And I can see the movement of Bitcoin in the world.
Open source.
Huh.
Every transaction that is occurring right now and every transaction that has ever occurred since time zero.
Gotcha.
Okay, so 2009 would be time zero. Satoshi's white paper, 2008, the first transaction, 2009. So we're coming up on over 15 years of
Wow.
of this working. So if you were an accountant, and my accountants hate me because I hate paperwork, but if I gave you my shoebox of receipts and I said, okay, these are all my business expenses I need you to itemize for me. Imagine being able to see that, and I could give the accountant the software and say, here's every transaction I've done in sequence. And by the way, none of them are out of sequence because the blockchain doesn't allow you to go backwards. You can only build upon it, which is this concept of many transactions. And there's a lot to pack in here for a shorter podcast, but imagine many transactions occurring every 10 minutes. They get packaged up into a block of transactions which have been confirmed and then stacked one on top of the other, just like we used to do with blocks as kids or Legos, right? Only this tower is indestructible. It can't be removed. So transparency, it's the hands down winner. The Federal Reserve hasn't been audited in like forever. We don't know what they're doing at the Fed, right? So compare the opaqueness of these kind of oligarchs of a dozen or so individuals who get to make all the decisions about what happens to your purchasing power. We're talking about home purchases before we recorded, right? What's a huge factor in affordability of a home? It's the interest rates. Well, 12 individuals get together and make all the decisions about the affordability of money. That's really different than a totally decentralized system, which gets an audit every time a transaction is confirmed and is open source for anyone to see. So it's the ultimate in transparency.
What about volatility then?
So an up and to the right anything, take Bitcoin out of the equation here for a second. If I was putting together a traditional stock to bond portfolio for you, and I said, this portfolio, Dennis, is going to be very volatile, what would you expect in return?
Big returns.
Big returns, right? And the opposite is true also, right? This isn't volatile at all. In fact, I'm going to start adding some government, organizations, acronyms as guarantees behind this. You'd expect pretty low returns.
That's right.
Right, for something like that. So volatility, and it took me a long time to understand this. My business partner and our CIO, Matt Dines, really helped me with grasping this. Volatility is the price you must pay for something which goes up and to the right. So now what's important is time preference. And if you have a low time preference, if I don't need these dollars, which is why you always ask these questions, if the compliance people for the firms that are in this building, when do you need the money? That's a pretty important question on any new client profile questionnaire. So I know how much volatility I can introduce into the portfolio, even if that's stock introduced volatility. The other thing that's kind of interesting is we used to think back to this. We came to this as credit managers. We used to think that the way you dampen volatility was you added more bond to the portfolio, right? But look at these things in more recent history. they almost have a correlation of 1 as of late. You're not really getting that much diversification from having fixed income. You're just getting crummier returns, for including fixed income in the portfolio versus the equity on a shorter look back time scale. So anyway, the volatility of Bitcoin is that's just something you have to accept if you believe that this is going up and to the right, and the why of, well, why would this go up and to the right, gets into some deeper, well, what's happening with the money, and questions that you have to go through. Which again, we can dig into some of these, but I think the most obvious one is the money printer, and you have no control over the rate of speed. But I can tell you, it's on, and anyone who's listening to this understands compounding. It's accelerating, right? So we become so numb to how much debt we have incurred. So John Adams said there's 2 ways to enslave a people. One is by the sword and the other is by debt. This goes bad historically for societies that don't understand this and lose control of their money. And not here as an investment person, here hopefully viewed one day as being patriotic and caring about my fellow humans. If you don't like inflation and you don't like the fact that you can't control it, and you want to have some say over how you stored yesterday's efforts, which is your energy, your scarce energy, whatever time you've got on this earth to put toward whatever you did, and then you stored those acorns in something. Right now, if you're operating outside of Bitcoin, you have no control really over whether that stores value and gives you purchasing power today or more purchasing power tomorrow than it did the day you earned it. And you can go back to the Weimar Republic and see this happen in real time. Things were getting repriced from the time you got your check leaving the factory on Friday to the time you got to the store. Prices were changing. That's how quickly this can get out of hand. So these are the problems, and you don't want to be viewed as Chicken Little saying the sky is falling, but people who I think prudently worry about big problems tend to have fewer problems into the future, and this is one of those that is going to become a problem if we don't do something about it.
So how does that, let's swing, but so this question, as I ask this, we're going to stay as high above compliance as we can. Can you talk at a very high level how your fund works that you've been working on? Yeah,
and just for the compliance people asking, I think what you mean by that is we're just not going to get into the the return data of the fund and things like
let's
that.
Keep it up there.
So back to that, you have this convergence between dollar system and individuals or businesses that prefer to hold Bitcoin as a balance sheet item need to monetize still in a dollar system. So we run a private credit fund, which is only available to accredited investors, and that's a defined term, that provides dollar capital ultimately to those businesses who become the borrowers, who are then posting Bitcoin as a form of collateral. In return, then, this is a credit spread product. They're charged an interest rate. There's a cost to managing the fund. Everything that's left over, we're distributing back to our investors, who are considered limited partners in this GP-LP structure, which is a pretty common legal structure for a private credit fund. We do that every month. Some investors choose to reinvest, that interest income that we distribute to them into more shares, but they have the option, our limited partners, the shareholders in the fund, of receiving this as monthly income, which is kind of cool. As a fixed income manager, I can produce something that we seek to be predictable, healthy income compared to Treasury rates, which is kind of the benchmark for, is this a good risk-reward trade-off? The loans are 1 year in duration, so if you're a credit manager, you worry about duration risk. Some really strong banks went out of business because they forgot to worry about duration risk. So 1 year loans, by our measure, is a reasonable time period to have debt. And on the other side, you have a business who's able to expand upon their business thesis to take those dollars and better themselves. And if you have this ecosystem working, you have individuals who are providing dollar capital who become the investors, businesses who are promoting their best interest, and in the middle of the table, the ante, in case those loans go bad, is Bitcoin. And you go, well, gosh, that's so different. I have a hard time getting my head around that. Well, Bitcoin doesn't sleep. Bitcoin trades 24 hours a day, 7 days a week, 365 days a year, 366 on leap year. And so in the event that a loan does not perform, you have an asset which we have the ability to sell at all hours of the day. And that's pretty unique compared to, say, real estate as a form of collateral. And this is not a cast to shill against real estate. I have real estate in my portfolio. But selling real estate on a time preference that isn't your own creates a fire sale, and it's clunkier to sell real estate. Having just closed you and I both had that in common.
Yep.
Having just closed on a real estate transaction last week, I had to have an appraisal. That took time. I had to have a survey to confirm that the lines were where they thought they were. That took time. We changed the closing date to give the seller time to remove more items that were in this house that they were selling than they figured upon having. Yeah. So we moved that back 30 days just to accommodate their schedule. And I've got a whole host of things I need to do now to make improvements, on this thing, which has been exposed to sun and wind and time, right? Bitcoin is durable. You start to have a lot of, if I said Kansas City is a great real estate market, but not every piece of property in Kansas City is the same. I think we could agree. There's a reason CVS or Walgreens likes certain corners better than other corners, right? So that diligence requirement becomes important. So this is why you'll hear institutional investors talking about, getting really comfortable with the management team and reinvesting once they have performed and exited a deal, because now they've built that trust, that it was reputation that they were betting on, and now they've built the trust through execution and performance. Proven operators, that's a term you'll hear a lot in, multifamily or commercial housing or commercial buildings and things like that. You do have to prove it, because the building we're sitting in used to be used for something totally different.
That's right.
Than what it's being used for today. This is the old Sprint campuses, right?
That's right.
You have some T-Mobile parking spaces that were reserved I couldn't park in today, and then you had all the other businesses that are using this campus.
That's right.
Well, there was a period of time where this sat empty, and it's evolved into something pretty cool, but there was a period of time where what do you do with this was kind of unknown. And then, oh, by the way, throw COVID into that mix. So you have this whole prove yourself as an operator, prove your business plan, go inspect it. You have to actually send. I was talking to people in real estate. I was supposed to be in a conference in Miami last week talking about our fund. And so catching up with people virtually after, they had been all clear, mostly some Miami folks who didn't get hit, hardly at all. But they said, yeah, we had to send people out to go look at the properties that we manage. You don't have to do that with Bitcoin. I have to turn on the open source code, and I can see it. It's hurricane proof in that way. So there's one example of its durability, and from a time preference as a risk manager, right? What's my obligation to the investors who've given dollars to the fund? It's to do our darndest to make sure that that the loans are performing and that the collateral is still there. So we can prove the existence of collateral any hour of the day.
Any hour of the day.
And that's something that is just a lot more, even if you can do it well, is admittedly time intense if you're doing it for something like, real estate or automobiles.
Yeah, I've got a question for you with this. And I looked this up. I was doing some homework, and I think it probably fits right in this spot. But can you talk about the custody of crypto? Let me rephrase it, because I don't want to have to put $1 in your guys'
dollar in our holiday party jar. Yeah.
But so for Bitcoin, let's talk custody, and then because you convinced me the transparency, the liquidity, it's totally there. Let's talk custody, and then I was reading something about a multi-signature collaborative custody model. I have no clue what that means.
Yeah. So when you're looking at all the things that you have to put in place to facilitate this type of a investment product, all the parties that I talked about. And ultimately, our job is to produce quality returns that are in line with what investors expected and get them their money back when we said we could, right? So there's a lot of risk management framework that goes into this. With any business, then you say, well, I've got to go on this expedition. What are some things I need for my journey? This is my kid's Dora the Explorer, cartoons, right? And this is how the backpack and map get put in there. Well, we need to be able to isolate the collateral. And in this case, remember the collateral is Bitcoin. Can't touch it. So how do I make sure that it's isolated? I don't have title to some property. I can put a sign out under new management, those kind of things. And so you go into this, well, there's some things we need. Do we, build, buy, or rent these things? Well, there's a company that we have partnered with for this product called Unchained Capital, who have become really good friends, but become good friends because we're of like mind, I think, about having a long time preference and doing things the right way. And I will say this about regulation, and this is why I was heartened to hear, Donald Trump and RFK Jr. and now some rumors about the Harris campaign, or camp rather, saying if they came to power, they would like to see more regulatory clarity in the U.S. on this topic so that we don't get left out of the conversation. Innovation has typically been one of the things that we've claimed as an American ideal and zeal. Right. And entrepreneurship should be, bipartisan and facilitating new ideas that leave this place better than we found it for our kids has typically been an American idea. So I love it every time I hear Bitcoin talked about, not as a bipartisan issue, but just as a non-partisan issue. But in the earliest days, we run a 1940 Act fund. That's so weird to think about. I run a fund that's governed mostly, so that's our ETF. I run a fund that's governed mostly by rules developed in 1940.
Yeah.
So the rate of innovation, where I'm going with this is the rate of innovation, it just got ahead of the people who make the rules.
Yeah.
And it was kind of embarrassing. You remember a few years ago when Mark Zuckerberg got hauled up to Congress and they were asking him rules, and aides are whispering in elected officials' ear because they were asking questions about the internet that just kind of embarrassing, right? You could go, these guys don't understand how this works at all. And the rate of innovation here is taking place so fast that I would say some things, bad actors can exist where you have a vacuum of no regulation. This is why disclosure is so important, right? And making sure that you have properly disclosed risks so that individuals can make decisions. That's ultimately, it's a self-responsibility comes into play for those accredited investors in the absence of regulation, where they've got to make a decision about the risk-reward bet that they're taking. But back to your multi-signature question, what we liked about Unchained was that they have really done things the right way from the beginning, even absent people telling them you must do things this way. So they really built a mature financial services business, hired compliance people, hired former bank compliance people, hired attorneys, and said, if we're going to do this, let's do this in the framework of what we would assume would be good, prudent regulation about our business. So they never, in our diligence, can we see that they've ever cut corners on doing this the right way. And there's been a lot of enterprises who have evolved to help individuals buy, sell, custody their Bitcoin or their other digital assets who, in our opinion, have cut corners. And here's what this leads to. It leads to losing your asset, right? Because you don't have rules around custody and things like that. Multi-signature, when I buy Bitcoin, there's a term referred to as not your keys, not your coin. And what that means is you may have heard people using a cold storage wallet or a self-signing device in order to transact in or hold Bitcoin. You may have heard other people talk about buying Bitcoin through an ETF, and yet other people talking about going to Coinbase or some other app on their phone and buying Bitcoin. Kind of take those one at a time. But I want you to keep this phrase in mind as we think about those, especially if you're coming at this as a first-time listener curious to Bitcoin. Not your keys, not your coin. Keep that in mind as we talk about this. So if I go to Coinbase and buy Bitcoin, what I have really done is I have Bitcoin on an Excel file. I'm simplifying probably how they keep track of this
Sure.
in their system, and I'm not trying to rip Coinbase, specifically. This is true of anywhere you go online to buy Bitcoin. But what I really have in the fine print is a credit claim on Coinbase in that situation. They're not walling off that Bitcoin and segregating it and saying, this is John Ruth's.
This piece is John's.
Yeah, and we've put that in a cold storage wallet, and it's bankruptcy remote, and it's just in their pool of Bitcoin, and it has an IOU attached to my name, next to me. And that's when I call in and say, hey, I want that, or I want to sell it. That's how they verify that those two things exist. But in the event that company, take their name out here for a second, just a company that I purchased from, let's say, goes out of business, I don't have my Bitcoin anymore, right? I'm now a creditor to that business. There's a lot of other people in front of me as creditors on this business. I'm unlikely to get my asset back.
Right.
When I purchased the ETF, they're never going to, BlackRock is never going to redeem me in Bitcoin. There's a gold ETF that's been out for a long, long time. State Street, the Spider GLD ETF, when I sell it, a bar of gold never shows up in the mail.
That's right.
I'm getting redeemed in dollars. I have price exposure to an asset. It's a one-to-one price exposure asset, but it's not owning the asset itself. Now, if you say, well, why would that ever be important to me? Listen to an evolution that RFK, so, since we're talking about politics, I'll go as close as I can now to the middle. He's aligned with Trump, as of this recording. But what I thought was really remarkable about one recent example of someone saying, oh, that's why self-custody of my money might be important. You remember the COVID trucker strikes in Canada? You remember a bunch of truckers getting debanked by the Canadian government?
Yep.
And you go, Canada's not on a terror watch list. They're not on some fence-in, background check. It's pretty easy to go walleye fishing, smallmouth fishing in Canada. We've got a pretty friendly relationship with all of our friends there to the north. You don't think about them as a totalitarian regime. And I think a lot of people, what was kind of interesting for COVID is I do think that, the orange pill example is used oftentimes from the Matrix. Green pill, red pill. Being orange pilled is something you'll hear people talk about a lot when they go through Bitcoin. I think there was a lot of folks who went through COVID and went, are we really doing this? Whatever the thing was, there was just a lot of chances to go, who's making these decisions for me? And is that really happening? And I think for some people, wherever you're coming to as a listener on this cast, for some people, including RFK by his own admission, he looked at a friendly country like Canada, who resembles a lot of the things that we talk about here, just maybe less guns. And it was like, holy cow, you got upset with a whole group of people who protested, which is something we have traditionally kind of held dear here as a right in this country.
That's right.
So much so that we'll usually let you go a little over the edge in your protest before we say, okay, that's enough, quit burning my stuff down, right? Like, the whole First Amendment idea is a pretty valuable thing here. And then for the government just come in and go, you're out.
Yep, you're out of the system.
You're out. It means you can't buy gas, you can't buy groceries, you can't pay your mortgage, you can't pay your bills. You're done. That's how, I think for a lot of folks, when they look at that, they go, holy cow, I am pretty much relying here on the full faith and good acting of a government. And that's an evolutionary mindset for folks who go, oh, maybe I want to own this myself. So these are the gold commercials where it's, do you want a gold certificate? And hey, I'll hold it in vault for you. So like, let's say that was the exchange here, right? And I think you can tell this is a rhetorical question, but hey, you give me your dollars and I'll hold the IOU here that says that we owe you gold. Yep. By the way, that was our old banking system, pre-Federal Reserve. Or I do the one where I go, no, Dennis, you send me my dollars and I'm going to send you the gold. And you're like, I think I'll take option 2 if I'm a gold buyer, right? If it's not in your safe at home, it doesn't belong to you.
That's right.
Right? And so that really is the mentality of Bitcoin. Self-custody, this is a long answer, but it's required because there's a lot going on here and also a lot of attachment to self-sovereignty, that I think, again, we take for granted here in this country because we've had it, pretty good on the backs of people who worked hard, to earn those freedoms. But it's so fragile. You remember Reagan reminded us, it's just a generation away, that fragility. And I think a lot of folks looked at that and said, whoa, little COVID, you can really poke the prime minister here and he'll cut you off up there in Canada. Maybe I should have a second option here for my self-sovereignty to take care of me and my family and be able to do the things that I think are right. So self-custody is the idea of taking Bitcoin into a personal storage device. And if you could remember the passphrase that accesses that device, you could literally take your money anywhere with you in the world, even if someone took that physical device away from you. You could purchase another device, turn it on, enter that passphrase, re-access your Bitcoin. If you needed to flee Ukraine today, where you could only leave with like a couple $100, in my understanding.
Yeah.
Someone who works in my business is a partner of mine at Build. His really interesting long story, but they were in South Africa during the apartheid. You couldn't leave with your money. So there's been examples of where people need to be able to be mobile and still carry their wealth, with them. Gold is really, you're very capable of doing that, but one of the reasons it's heavy, and one of the reasons we evolved to the credit system that we have today in the advent of the telegram, we decided, hey, we could actually settle these transactions a whole lot faster than having to wait for the Bank of England to send a ship around, or through the Panama Canal or over, around the Cape Horn. There's an example of an earthquake in like the early 1900s in San Francisco where we were literally trying to get gold to San Francisco so that we could pay insurance claims. And everyone's like, this is nuts. This is not working well. So that transportability is a part of the liquidity, piece. And you've seen this in the history of money. The technological advancement, that stair step up, is usually when people go, oh, that was so much easier, right? That's the tap to pay option.
Yeah.
Are you like me now where you're frustrated inserting your card?
A little bit.
Like if I can't tap to pay, don't you get like a little bit annoyed at that? Okay, so think about how in your lifetime, well, you admitted to me you had to write a check recently and you had to remember how to do that.
Yeah, it's like why even finding them? That is an interesting thing because the thought of it is. When I'm listening to you and I'm thinking it's a matter of us getting used to it and being comfortable. Because when I was a kid, the thought of paying with something other than cash was almost like a science fiction thing where the guy would pay with his credits and the stuff. And now I rarely carry cash.
I had to pay $10 to get into my daughter's AAU basketball tournament this weekend, which I'll pay thousands of dollars for her to play basketball, but I get incensed when the guys that run our league charge me $10 to get in. And I was like, holy crap, I only got 100 in my pocket. I carry like a little bit on me. Don't rob me. I carry just a little bit on me, in case. I was like, I don't want to break this. And I was like, oh, thank God they have Venmo. They'll take Venmo, at the counter. Because I just don't have $10 on me that often.
That used to be the way to dodge the kids if you didn't want to buy whatever was being sold. Oh, I don't have any cash on me. That's okay, sir. I take Venmo. It's
well, yeah, you can get around that now. And I don't want to get these are long answers, not because I'm trying to be long-winded or be a politician who avoids answering your question. Yeah. But it's complex. And I think that's one of the reasons that the financial advisor industry, I'm begging you, leaders of organizations, compliance folks, you've got to lean into this and form an educated opinion on this topic so you can talk to your clients about this. They need your help. You can tell already in my answers, this is complex. Our money system and our financial system is complex. It would be naive of us to think that everyone is going to do that on their own. And so you need to be educated on this so that you can explain the pros and the cons.
Yeah.
I just told you 3 ways you could own Bitcoin, and there's a pro and a con to each one. What I didn't settle on was kind of my infomercial for Unchained. What Unchained has done is they haven't taken any shortcuts, and they help people take self-custody of Bitcoin.
Mm-hmm.
And so they have some solutions that buy, build, or rent. We said we should just partner with these guys. We can't replicate what they've done as quickly as we need to bring this product to market. That can help isolate the Bitcoin. So the borrower maintains a key. So you can actually take this thing that used to be one thing and divide it into three things, which is the passphrase and the ability to access the Bitcoin. So the borrower can maintain a key so that they can see, trust but verify, that their Bitcoin hasn't been moved. And then you have, in this case, the parties who facilitate and service the loan maintain the majority of the keys, so that if a loan goes bad or price drops and the borrower can't meet margin call standards, that the Bitcoin can be sold. And we do that without an appraisal, a survey company, an attorney, a judge making a declaration. It just gets sold. And so that's the time preference beauty of Bitcoin as collateral, and also the verifiability that the Bitcoin blockchain network gives us, access to, that's different than any other type of collateral.
I think something you said, you said these are complex. This is a complex scenario. And I think it's complex because it's new. And I think that so much of what we do now with, even the purchase of somebody comes in, buys a share of IBM.
Mm-hmm.
I think that if an advisor had to explain, there are things that we just take for granted. Like you and I both have smartphones and we can use them, but to explain how they actually work, that's a little more complex than talking about the cloud. Talking about the actual, where is your actual share and how are you purchasing this? How is it being settled? We take that just for granted, where if somebody had to stop and say, like, no, really explain to me how that all exactly works, that'd be a pretty complex answer too.
Well, and you can kind of go down this nefarious route where you start to go, I wonder if this is almost by design, or if this is just because we had to fit all the subject matter in plus recess and then have standardized testing at the end of the year.
Mm-hmm.
I didn't learn until I was an adult that we were on our third version of the Fed. Did you learn that in the schools you went to in Kansas?
No, I did
okay,
not.
so there's a lot of things I think that aren't in a Series 7 or 65 book that people in our industry, by whether it was intentional or unintentional, got left out of the core curriculum.
Mm-hmm.
Most of us learn about, ancient world, pre-Revolutionary War, the things that happened in the U.S. to get us to today, your state's history based on, which state you grew up in.
Yep.
And then you pretty quickly get to World War II, and then it's like, and then let's talk about who's running for president, right? That's like, and there's a lot in there to unpack, but we're actually on our third version of the Federal Reserve, and like one of the biggest, I don't even know what to call it. It's a joke. It's a jab for sure. Andrew Jackson, on his deathbed, said that one of the biggest accomplishments he had as a president and political servant was killing the second attempt at a national bank, and they put him on the $20 bill. It's like the ultimate insult. He didn't want to be on the $20 bill. So there's that kind of shows you what a geek I am, that I think something like that's funny. The irony or the sad irony there, but it's not only there's a coding element to Bitcoin that's going to be foreign to a whole group of people who don't understand what's happening with the open source code and things like that. And these are things I don't have a coding background. I have to rely on my team, who much of which is ex-Amazon, when I need help, and I'm fortunate to have that that in our hip pocket to go to people I trust for this information, or to send me to other places to go do research. But it's also the complexity of the monetary system itself, which is, again, something I think if you woke up here in the U.S., you just take for granted. But you can't, I don't know any advisors who, within 5 minutes, if I say, well, talk to me about something that's concerning to you, don't bring up, our debt clock.
Mm-hmm.
These two things are intertwined, and I think that's what we're trying to do is help the advisor community, but just our friends, family, neighbors understand that this is something that is fragile, has to be has to be thought, intentionally preserved by every generation. And money, like it or not, has evolved. And I think we're going through one of those evolutionary points here, and Bitcoin can be a helpful thing to study. But if you don't do it, and now we're talking about an asset that has been the best performing asset class for the last 15 years, could you really, my call to action as a former advisor, if you go another 15 years and this happens again, and your thesis on it when clients asked you a question about it was, we can't talk about that. That's Fight Club in my organization.
Yeah, or it's a gimmick.
Are you really a fiduciary?
Yeah.
If you can't explain it down to the studs, are you really a fiduciary? And I think the answer is no. And so we've got to do a better job of educating ourselves about this. That starts with curiosity.
Yeah. Now, you mentioned a while back, you mentioned that ETF that's governed by the rules that were put in place in 1940. When do you think, how long till we catch up? I'm sure the SEC, the NASD is working on it as fast as they can, but.
Yeah, even people who were going to be neutral on any new topic or technology have a mighty task, to stay ahead of innovation. And if you think about how it should work, in my opinion, you're probably always never. Government shouldn't be forecasting where the free market's going to go.
Exactly.
That's probably going to lead to a pretty bad free market situation. So government is naturally, at least in the U.S., always going to be a little bit behind of where the market wants to go or push things. So I think that's natural. And it's like, that's no one's fault. That just happens. You can't be a piece of shit. And now I'm talking about the ones who are operating the new inventions and take advantage of people.
Yeah.
Right? There's what's the saying? There's a sucker born every day.
Every minute.
Every minute. Don't be one of those people who takes advantage of your fellow person. And fortunately, we've got other pretty nice rules on the prosecution side that can deal with bad actors. So don't be one of those guys. You make the world hard for all of us to live in, and make it easy for us to distrust our fellow man.
Amen.
So it just kind of starts with those first principles of don't be a bad person. And we need to go after those bad actors. But I think innovation will always be ahead of government. Then you get this other interesting wrinkle, which some people in our business, I think maybe I'm not smart for fearing this more than I should, but just call a spade a spade. There have been choke point after choke point after choke point put in place on the Bitcoin community specifically, as opposed to a sit down at a table and saying, hey, there's got to be some regulation here and some seeking to understand, and what are you trying to accomplish? And the things that you feel like you could probably get done with your elected school board member if you had a concern about school policy, like you'd probably sit down and talk about it, right? It might even start with a coffee and evolve from there. But the current or former regime has by its own admission, has a track record of being pretty hostile, to this topic. This is kind of like the energy conversation. If you think oil's dirty or good, and we could bring people on who could debate both sides of that, my bet is it's better when it's done here. Like the product is probably cleaner, more efficient. The people who deal with and touch the product are more likely to be safer.
Yeah.
Like the economy, not the economy, but the ecosystem. Everything about it. My bet is it'll get done better here in the U.S. And so I think it's very reasonable now, if we look forward at people who are running for office who have said, we want to give clarity about this topic here. That's a healthy state of being. If you ask anyone who's trying to innovate in something, what's the number one thing government could do for them, besides you'll get out of my way answer, just like a reasonable number one answer you get from folks is, just set the rules, give me clarity about what the rules are, and then consistency about the rules.
That's a good one right there.
And so that is, for me, what is encapsulated in regulatory clarity is set a framework, make it fair, I'll play by the rules, as long as it's, those rules don't make it so egregious that I can't afford to play by the rules. But let me play by the rules and then be consistent so that I can develop a 3, 5, and 10-year, business plan. And I think that's an opportunity here for us to lead, in the U.S. on that topic. Here's what's interesting, because I hear it hasn't come up yet, but people ask me all the time, aren't you concerned, the fate of Bitcoin if a country makes it illegal? And I go, we've already got a base case for that. That's happened all around the world. And guess what? Adoption increases. Human rights, freedom, these are things that I find as little seed notes in Bitcoin all the time. He can't stand here today and defend this position. But when I read arguments from Thomas Jefferson, I go, man, Thomas Jefferson would have loved Bitcoin because it does so many of the things well that he was arguing we need to have in a sound money and keeps government at bay, where government just has, not because government is inherently bad, but because it's those traps in our own DNA where we're susceptible to making mistakes. How do you engineer a system that just makes it less likely than to go down that less desirable path? And I think that's what TJ was.
That's probably what he would go by now.
So I think that's what he would go by. That'd be his handle, hashtag TJ, the real TJ. But I think that's what he was calling for, and you see a lot of similarities in Bitcoin.
Well, so as you look forward, we'll land this plane here. As you look forward, what are the things that when you look at what you're doing, where Bitcoin is going, where it fits in the role of the financial advisor, what excites you? What scares you? Not scares you, what keeps you up at night a little bit?
Well, in the role of the financial advisor, I think that it is the rate of change, and it's the heels dug in, it's the stubbornness that I see from many people in the financial community who have really been resistant to this idea. And I know change is hard. I mean, I'm a product of don't change much about me. That's something I'm guilty of also. Change in our financial system is inevitable. And if you study history, you see that people who have the soundest money stay in control the longest. And control is important here because the only country who has ever detonated a nuclear bomb chose not to go invade and use it on other countries. And had someone else done that, if Russia had beat us to that as an example, that isn't historically their game plan. They had historically absorbed more land on the map, right?
Yeah.
So whatever you think about, the U.S., our transgressions, the things we could have done different historically, it's still the best shot we've got at being, a fair, friendly place. And us having a sound monetary system and leading in a global economy is still the best bet at freedom as we know it, I think, on planet Earth. Let's keep that moving in the right direction. My claim, unrelated to what we do, with investments, is that Bitcoin fits into that puzzle, and putting our heads in the sand is not going to help us lead where this bus is headed. And unfortunately, we haven't had enough debates leading up to this presidential election. The few that we've had, we're not talking about this in the way that we have to do something about it. We're going to have to make some really hard choices. And I am now of an age, I've got enough gray in my beard, but I am now of an age, I care about making those hard decisions at my level so that my kids and my grandkids can have, a better time here. Yep. And I want to do my part in leaving this better. I'm convinced that this fits into that future state of leaving it better than we found it. And so we need more people and professional stewards, I always thought of myself as a river guide, when the fiduciary rules were being defined when I was in advisory practice and a lot. Well, what is that? It's like, it's pretty easy. You just do the right thing.
That's right.
You look out for your client. That's what you're here to do. You don't hire a river guide to sit in the front of the boat and look backwards down the river. You're in the back looking downstream, right? And I'm telling you, we're either going to fall off a cliff and it's going to be a miserable experience for everyone. You're going to have a financial reset that is very painful, or we can own this future and we can help people prepare for their future, but giving them things that that just get debased because you woke up on a Monday morning. That's the state that we're in today. And we all know they've got a hard job to do. You got to use some data. But the Fed gets to choose its data. CPI gets to exclude all these things that become annoyingly expensive, right? Like you can substitute steak for ground beef in their CPI data when you choose to. So it's not the experience that you feel at the store. And you and I are fortunate that we're in nice suits here talking about this, and that's not the position of a lot of people who feel inflation even more so than you and I do. But I can tell you it's annoying, to our family and our planning and our position. So a concern is present state financial advisory community will not work. I think it violates our fiduciary duty, and I'm not an advisor anymore in that capacity, but I talk and a lot. We're not being fiduciaries if we ignore something that's the best performing asset of the last 15 years and has so many tie-ins to things that we all admire, like freedom, supporting of human rights, and don't say, okay, I got to spend 100 hours on this before I have an opinion on this. So do that, and then come back and let's have a conversation about this. If you're someone who is a skeptic or just ignoring it, that's a starting place. I use the same topic as the thing I'm really excited about. So that's what concerns me is that we're going to be complacent. The thing that I think is exciting is this blue ocean. Yeah. This is true. We are, all of us, if you're listening to this today, you are still early enough that you're here at the formative time where you can both be a part of the change for someone else. And that's not a call to action to, nowhere in this cast that we say this is what you buy and how much and what the allocation is. I'm just talking about study. This is a time where you can come forward and educate yourself on what's happening, why it's happened. And, like just my own study, it's totally taken me back through history books, I feel like a different walking path than the one I came up on, which is, I think all of us came up on history predominantly through war, right? Like that's the timeline that you traveled was who won, who's in charge, who lost, what do we do next? War is really expensive, really expensive. Ask Napoleon. This was kind of his undoing. And it's taken me down this side cart where you can kind of observe all of what you thought you knew about history and you come at it through the financial lens. And there's a lot of holy cow for me in that I think helps tie all this, back together to where we are today. So it's been enjoyable. Like it's fascinating. So I think your listeners who take it upon themselves to go through this journey learn that there's been we're on our third version of a U.S. Federal Reserve. And if you're listening and didn't know that, going back through 1, 2, and 3 is fascinating. And it's going to have you, reading about people you thought were patriots in a totally different lens than, the redcoats are coming. That war lens. But war and money are also very much, tied together. Sometimes that skeptics put a tinfoil kind of cap on that view, but that's okay. I think, to be a financial steward, to be an advisor and a fiduciary, you need to be skeptical. Like, if not you, who? Like, that's your job, right? So, but be an educated skeptic. So I'm both concerned about complacency, to summarize or in conclusion. But I'm so optimistic about this asset class, what this can do for people, what it can do for advisors who embrace it, what it can do for clients who understand what it is, and therefore they can make better decisions about whether it's for them. But I think it's one of these times where it's if you just say like, hey, I know one of these guys, but I would say life has not really rewarded them in the same way it has me or other people. I know a few folks who are like, yeah, that whole internet and having an email and just I'm opting out of that system.
Yeah.
Can you think of like a few people at your Thanksgiving gathering who have just like said like I'm opting out?
Yeah.
It's kind of a lonely experience, and you're probably not looking to them to be like the thought bearers for where we're going as a society moving forward. Like, good on you I like quiet little cabins in the woods too, but this is not actually how things get done. So that's, I think, that's the future you have if you just pretend like this isn't happening. And if you want to see a big example of that, look at Larry Fink's comments. Larry Fink, the CEO of BlackRock. If you look at his stance on this just 3 to 5 years ago compared to where he is today, that's a sign of don't get browbeat about this either. Just go into it with an open mind and just be ready to defend your position, whatever side you come out
one
on.
way or the other.
Yeah.
Well, we're going to have to, I tell you what, we're going to have you back on, and we're going to have to continue this discussion because this is such a big area. This is such a growth area and an opportunity. And there's still a lot of educating that needs to be done.
Like, what is Bitcoin versus what is crypto?
Exactly. We'll put the tip or the swear jar up here next time.
I may just send you one for the. You got some swag here in the room, so I'll send you something you just kind of have as like the cuss jar or the swear jar for
I like it.
Okay.
I like it. All right. Well, John, thanks for being here today. We could keep talking for all the rest of the day on this topic. But thank you. We're going to have you back. For everybody else, don't forget, like, subscribe, follow the show. That way you're always in the know when we drop a new episode. And then if you've got any, if there's a topic you want us to dive into, let me know. Put that in the comments. I read the comments. If you've got constructive criticism, non-constructive criticism, I read them both. Either way, thanks for being here. We'll see you on the next episode. John, thanks again.
All right. Thanks, buddy.